Welcome to this week's episode of Your Stock Request for the 7th of November. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is a weekly video where I take your requests and analyse the share price charts. So this week we have Galaxy Resources, Downer, Codan, Colins Foods and Solpat. So if you have a request, send it through. Remember to sign up to the free newsletter. Remember to share the video on social media. And if you enjoy this video or you enjoy my review of your stock, we'd love to hear from you and get a review on Google or Facebook. And just finally, any advice here is general only. So Galaxy Resources. So this is a weekly chart. In the last couple of years, doing the business channel before they cancelled it, someone seemed to ask about this stock every single time. And my answer was just stay away from it. So look, it's still just in a horrible looking downtrend. The early warning signs, as I've mentioned a few times, is early 2018. So what you get, and this is an important pattern to recognize. So when you've had a trend and then you've got this large negative candle or negative bar here called a bearish engulfing pattern, it's important to see how the stock trades after that. So the fact that price action for a number of for a couple of months, it could not get anywhere into this sort of trading range here. It was basically trading below that range. So that's a big negative. And then we could see it let go, and it's never been able to bounce back since. Looking at a daily chart, yes, we've had a decent move in the last several days. Volumes are okay, but definitely still early days. Still making lower highs, lower lows. Before it even begins to look interesting, we need to see a close just above sort of the previous high, which looks like it's around that sort of $1.20 mark. And you can see that, it's been a fairly obvious sort of resistance and support level in the past. So I'd need to see it get well beyond that and establish some support up there before it even begins to look like a trade. Okay, Downer. So this is the daily chart. If we zoom out a bit, we can see that $8 was a level. On a few occasions it was resistance, pushed through in October, came back to retest it and has jumped up again. So that's a positive. Just in the short term though, it is hitting some resistance. If we just move to a weekly chart, what you'll notice is if you sort of join up the peaks there, you get that resistance level. So we may well see it come back in the short term, and it needs to hold this support level, which is close to 750. If it pulls back here and then falls under that, then this pattern, we can call it a rising wedge, only once it breaks. If it breaks, we don't know if that's going to happen, but if it does, then you need to get out pretty quickly because it'll go back to this start of the wedge, which is $6. But for the moment, we just need to see it needs to get above this resistance level to be looking more positive. Codan, so this has had a fantastic run since the beginning of the year. Good volumes on the way up, so doing all the right things. However, I've noticed that it is starting to look fairly extended here. So the daily ranges are starting to widen up. So you could see these huge sort of daily ranges, whereas before it was heading higher in a nice, nice consistent manner. And now we're getting these huge swings. So it's basically looking fairly extended away from the range now. And I think that it'll need to come back into the range and settle down. And then the trend looks more sustainable. But this move here is not sustainable and puts it at risk in the short term. Okay, Colins Food. So for the weekly chart, so we basically had this consolidation here. So when we looked at it sort of end of last year, about a year ago, with the breakout, and it's been trading up ever since from sort of $6 to over $10. So it's done really well. Shorter term, if we're looking at the highs and lows, we could see that it's fallen under the previous low in the last few days, so that puts it at risk. So I think in the short term, we'll probably see it fall further, and I think it now just needs to consolidate the big run that it's had. So it's probably going to consolidate here for a few months, and it may well just underperform the market while it consolidates the prior move. And finally, Soul Patts. And so as we can see on the weekly chart, it's come back quite a bit over the last year, but starting to look interesting on the chart. So on the daily chart here, we can see that it seems like there's support in the lower 20s, especially on the breakdown here. It got scooped up pretty quickly, but quite obviously there's resistance at $23. So it's not a trade until it clearly breaks that level. And if it was to do that, it should go for a bit of a run. Initial resistance will come in around 26. So basically, if we measure the depth of this base, which is about $3, stick that on top of 23, it gives us about $26, where if we zoom out, we could see that's been a bit of a level for it in the past. So too early, we need to wait for it to breach $23 first. Okay, well that's it for this week. Send me your request. I'll try to look at next week for you.